Hello everyone and welcome once again to today's Market Snapshot. My name's Craig Erlam, Senior Market Analyst at OANDA. Now firstly I just want to thank everyone who turned up to last night's Traders Club, and for those of you who aren't aware, we are throwing these seminars every week at the OANDA office in London. So if you're going to be in London during one of the events and you'd like to stop by, you're more than welcome to join. Last night was the Traders Club, in which we went through some charts and discussed the markets for a couple of hours. It was a great group of people, and as I say, the more the merrier, so you're more than welcome to come down. To find out more about the events which we're throwing, you can check out our Eventbrite page. Just type in OANDA Europe into the search bar and it comes up with all the events. Next one being a Level 1 Technical Analysis Seminar next Monday, followed by Technical Analysis Level 2, and then OANDA Traders Club again, being the first Monday of the month, is always Traders Club, Macro Analysis Explained, and Creating a Trading Plan, and we'll continue to throw these every month. So like I say, type in OANDA, but make sure you put in Europe, because we're also throwing these events in Singapore, and it'd be a big shame to sign up for the wrong ones. Now, with that out the way, let's take a look at some of the key events in the markets today. Now, in terms of economic data, it has been a quieter session. Clearly, the focus has been on the inflation data from the UK and the US, especially given that the minutes from the RBA meeting was relatively neutral. It seems that the RBA governor is aware that they have cut interest rates quite quickly over the last few years, and they are at historically very low levels, or record low levels. This is the new RBA governor, Philip Lowe, and they seem to be happy with the level that the Australian dollar's at currently, and given the housing situation there, I think the minutes effectively alluded to the fact that any rate hike this year looks now quite unlikely, although I think people are largely pricing in further rate cuts, going forward. In terms of the CPI data from the UK and the US, both of these saw an uptick in the CPI reading. A couple of similarities between the two, being fuel prices being a key driver of the uptick in the CPI data. In the UK, there was also other factors leading to it as well, and not necessarily the ones that you would necessarily have thought. A lot of people are obviously waiting for the Brexit effect to have an impact on the CPI inflation data. The 20% decline in the pound against the US dollar, and around 16% decline in the pound against the euro. People are waiting for this to have an impact on inflation, and seeing this jump from 0.6 to 1 and from 1.3% on core to 1.5, people would have attributed naturally to the Brexit effect, but in reality it was driven by rising prices in clothing, overnight hotel stays, and like I say, motor fuels. One thing that was noted with the release though was there was no evidence that the sterling depreciation has had much, if any, effect yet on the inflation data, so it looks like there's a lot more to come, unfortunately. But that was to be expected, even if it hasn't had an impact yet. These things do take time to filter through to end prices and to the end consumer. So we are seeing an uptick in CPI, but unfortunately we can't really attribute that to Brexit quite yet. In the US, we saw a slight uptick in the CPI data. Again, that was attributed to motor fuels, and I think it was hotel prices. Not hotel prices, and rents. The core reading dipped slightly to 2.2, but I don't think it dipped in any way significantly enough to deter the Federal Reserve from raising interest rates in December. Of course, this is not the Fed's preferred inflation measure, but it is still a core barometer for inflation, and if we're seeing these trends forming in CPI data, we're likely to see similar trends form in the core PCE data as well, which is the Fed's preferred measure and released later on in the month. Aside from that, like I say, it's been a relatively quiet session in terms of economic data. We do have the API weekly crude oil stocks data still to come, and that is obviously going to have an important bearing on oil markets. Now, in terms of what's moving markets today, I think it's the most important thing which we're seeing today is that return of a little bit of risk appetite. That's being spurred by two things from what I can see, one of which is the rising commodity prices across the board, which is being helped along by the weakness in the US dollar. The other thing is corporate earnings. This is something I've touched on repeatedly in the over the last few days. We have seen some decent earnings today from, in particular, from things like the banks. We saw Goldman Sachs follow the lead from JP Morgan, Wells Fargo, etc. in reporting much stronger than expected earnings driven by improving trading revenues for those of you who are interested in that. And it's this that's helping to lift risk appetite so far in today's session, and that is really what's driving all markets, not just equity markets. So we are seeing a little bit of weakness in the yen, for example. We're seeing obviously gains in equity indices. We're seeing some of the risk on currencies as well, also seeing some gains. In terms of in specific markets though, first one I'll touch on actually is the FTSE. We are seeing gains in the FTSE now. If you think about it, the FTSE is heavily weighted in financial stocks and commodities stocks. So the fact that we're seeing gains in these two areas as a result of earnings and movements in commodity markets shouldn't really come as a surprise. But what I do think is important is we are now testing these levels around 7,000 again. And while we have dipped above here briefly during today's session, it's really not got the legs at the moment. So I'm going to be very intrigued to see whether we can get a close around those 7,000 and 14 levels. That is yesterday's opening level. If we can see a close above that, then that may signal a little bit more bullishness here. As far as I'm concerned, I still think we could see a move back towards the 68.75s, given the fact that we did get the completion of that double top and a failure to make a new high. But we are seeing this little bit more bullishness today, so I'm going to be paying very close attention to it. It's also interesting that the FTSE's making gains at the same time as we're seeing gains in the pound, because we have seen that inverse relationship since the Brexit vote quite often. But we are seeing gains in the pound off the back of that inflation data. The reason being that if we are seeing inflation tick up with little evidence that the Brexit vote has had an impact on it, then that makes a rate cut from the Bank of England in the coming months less likely. The central bank, Mark Carney in particular, has said they are willing to tolerate some overshoot of inflation, but that doesn't mean that they're going to get too complacent. And if we are seeing inflation rising at a time when the economic data is good and the Brexit effect hasn't had an impact necessarily on inflation yet, then surely you would think that they are now going to start to reconsider their position this year and maybe look to push it back to next year if they do deem it necessary. So a more hawkish sentiment among at the at the Bank of England is typically a bit more bullish for the pound, and given that the pound is so oversold at the minute, it doesn't surprise me that we are seeing it trading higher by around 1% today. Now, in terms of key levels here, we do seem to have this floor and a ceiling here, so support and resistance. The floor coming in around 121 to 121.30, which has materialised over the last week or so. Equally, this resistance is around 123.30 to 123.50. We saw it offer some support here a couple of weeks ago, but then that's turned resistance since then, and that is the level I'm really keeping an eye on now, because if we see a close above that, then we could be looking back towards the 124.50s to 124.75s. Again, this is prior resistance here. It's also worth noting that we are now entering this moving average band, or looking to enter this moving average band. Now, of course, the moving average band is quite wide at this moment in time, so I'm not overly fussed on it, but the fact that since trading below the band, it has found resistance along the way, it is going to be very interesting to see how we react around these 123.50s when it comes into contact with it at the first time of asking. And if we break through it, then that may confirm this idea that the pound is looking a little overextended to the downside, and we could be looking more back towards the 125s in the short to medium term. The dollar yen is continuing to trade sideways at the moment, so there's nothing really to update on that. The 103.50s to 104, 104.50s continuing to enclose this pair. I still remain bullish on this, but we've got to wait for further confirmation, which will hopefully see a breakout here in the coming days. But aside from that, just keep an eye on the commodity markets. We are seeing a lot more volatility there, of course. We've got oil markets, which I imagine will pick up in volatility over the next 24 hours with the API inventory data and the EIA inventory data being released. Again, this is looking a little toppy at the moment. We are seeing these lower highs being made in Brent Crude at these high levels. We've got this support here around $51 a barrel, and yet every time we seem to rally, we seem to be selling at a lower level. For me, that is looking a little bit toppy here, and therefore I wouldn't be surprised if we do get a little bit more of a downside move to come. If we do, especially if we see these 50, 80 or $51 level broken, then we could see that trigger a number of supports. We've got this moving average band again, and a break below here, we could be looking at a move back towards $50 a barrel, or just below here around 49.88. So something to keep an eye on here tonight, because this could get quite volatile over the next 24 hours. For more in-depth news and analysis, check out OANDA MarketPulse at marketpulse.com. You can also find out more about OANDA and sign up for a free demo account at oanda.com. Here you'll also get access to OANDA Forex Labs, which has a lot of great tools designed to help you with your trading.